Hi guys, welcome back to this week's Technical Insights. Singapore stocks ended last week in the red following regional losses in the major Asia-Pacific indices. Stocks fell globally after United States Federal Reserve Chairman Jerome Powell made some strong comments at the IMF conference last week. In particular, he said the FOMC committee is not confident that it has tightened policy to sufficiently enough to bring down inflation back to the 2% target. This dealt a blow to the bets on sooner rather than later rate cuts and signaled that the Fed isn't ready to close the curtains on the rate hikes. This forced traders to curb their bets on sooner rate cuts, with the first cut now expected in June rather than in May of next year, according to Fed Fund futures pricing. The Straits Times Index fell 0.91% or 28 points to close at 3,106 points last Friday, 10th of November. Across the Singapore market, losers outnumber winners 356 to 233, with 1 billion securities worth 816 million being traded. Constituents within the benchmark index were mostly in the red. In the Asia-Pacific region, Japan Nikkei 225 lost 0.24%, while the Shanghai composite index dropped 0.47%. Hong Kong Hang Seng Index was the biggest loser in the region, sliding down 1.76%. For the week, global markets managed to recover some lost ground as US Treasury yields stabilized. Equities staged a rebound as the US 10-year benchmark Treasury yield hovered around the flat line of 4.65%. High levels of unfilled jobs openings and solid private sector balance sheet supported the Fed's view of a soft landing. All three major US indices managed to close in the positive territory after the Dow Jones Index leaped nearly 400 points last Friday. The Dow Jones Index added 0.65% for the week to close at 34,283 points, while the S&P 500 advanced 1.31% to end at 4,415 points. Tech-heavy Nasdaq Composite Index was the top performer, rising 2.37% as Big Tech once again outperformed the rest of the 11 sectors in the S&P 500, finishing at 13,798 points. Microsoft jumped to an all-time high during Friday's session, ending the day higher by 2.5%. Apple, Meta, Tesla, and Netflix bounced more than 2% each, while Alphabet gained 1.8%. In Asia, the CSI 300 inched up 0.07% to close at 3,586 points. Hong Kong Hang Seng Index fell by 2.61%, the most in 3 weeks as Chinese chipmaker SMIC earnings disappointed analyst estimate, adding gloom to the outlook for corporate earnings over there. On our local front, our STI index slipped 1.18% to close at 3,106 points after rising 2.67% last week. Locally, our three banks followed the slide in the STI index. DBS, UOB, and OCBC all closed in the red for the week. DBS was down 0.36% to close at $33.17. UOB led the declines among the three banks, falling 1.12% to close at $27.40. OCBC dropped 0.31% to close at $12.97, below the $13 mark that we saw last week. SGX, however, gained 1.89% to finish the week at $9.71. The biggest winner for last week was Sembcorp Industry, who was up 4.34% to close at $5.05. The biggest loser was City Development, which was down 6.04% last week to close at $6.07. So for this week's technical analysis, we will be looking at both of these counters. But before that, let's follow up on some of the counters that we covered in the earlier video. On the 23rd October video, we covered Yangzijiang Shipbuilding, whose share price hit a high of $1.56 last week, up 13.87% from the 23rd October low of $1.37, which we covered as the support in the 23rd October video. The stock now hovers around the 20 days moving average, which is the white line that you see here, at $1.48, and it closed above that on Friday at $1.49. The 200 days moving average now in the red color line that you see here is at $1.39, and it still provides good support for Yangzijiang Shipbuilding. But for the RSI, now reading at 44, below the 50-point neutral mark, shows that the uptrend momentum now is weak. And so the upper bound of the Bollinger Band right now at $1.57 will be the final resistance target now for Yangtze Shipbuilding. Next, let me give you an update for Emperado, which is the spirits company. They are the biggest winner on the STI index last Friday, rising 2% or 1 cent to close at 51 cents. The stock continues to stay resilient despite the drop in the STI index last week. The 50 cents entry level mentioned in the 23rd October video is still a good entry level for accumulation. This is while we work towards the year-to-date high target of 52.5 cents. So in an environment where most of the stock in the STI constituents are falling, Emperado continues to stay defensive and is one of the stocks that you can consider in your portfolio. For this week, let's look at Sembcorp Industry, who was the biggest winner last week, up 4.34% to close at $5.05. The year-to-date high was seen on 8th of August at $6.05, and the year-to-date low was in January at $3.21. Recent low in 30th October was at $4.50. Above this level, you have the red color line, which is the 200 days moving average at $4.72. And just slightly above that, the white color line is the 20 days moving average at $4.75. The 50 days moving average, which is the yellow line, may also provide some immediate support at $4.93. Last Tuesday, 7 November, the stock RSI actually hit a high of 69 over here and was just 1 point away from triggering the overbought signal. For the rest of the week, the RSI retreated to 58 points and above the 50-point neutral mark. So I would say the uptrend momentum is still positive and we have yet to breach that overbought level. For the MACD indicator, the MACD line also managed to breach above the zero baseline last Tuesday. Trajectory of both the MACD line and the signal line are still pointing upwards, indicating that positive uptrend momentum is still present. The 200 days moving average at $4.72 and the 20 days moving average at $4.75 continue to be good support and entry level to look at both on the long term as well as the short term. The first target will be the recent high that you saw on 7th of November at $5.26, and above that, the next resistance level would be the 31st August high at $5.77. Another counter that we are looking at this week will be City Development. The stocks fell 6.04% for the whole of last week and closed at $6.07, hitting a new year-to-date low at $6.04. Year-to-date highs was seen on 2nd of February at $8.18. So the stocks has been on a primary downtrend since the beginning of the year. Looking at the MACD indicator, the MACD just crossed below the signal line last Friday, a signal that the downtrend is likely to continue and worsen in the near term. The RSI is weak at the level of 34 and has yet to cross below the 30-point oversold level. So with both the indicators showing that the downtrend is likely to continue as the momentum is likely to be weak, using the 20 days moving average, which is the white line that you see here, or the yellow line that you see here, which is the 50 days moving average, may be a good level to enter for a short position. And that is all I have for this week update. As usual, if you do find this video useful, we appreciate your support by giving us a like or a share and hit that subscribe button to stay up to date to our latest content. And I'll see you again next week in the next Technical Insights.